Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Stephen Innes. He's the Chief Global Market Strategist at Axie. Steve, welcome to the show.
Thanks for having me, Brian.
Now, Steve, let's take a look at how markets in the region performed this morning before we get your insights. Now, let's start with the SGX, which is trading at 2,939.51. It's up 0.27%. The Bursa Malaysia is at 1,611.18. It's up 0.19%. Chinese markets are closed today for the Lunar New Year holiday, so that includes Hong Kong as well. The Nikkei is up 1.84% at 30,638.29. The ASX 200 is up 0.6% at 6,910. And rounding off, we've got the Kospi, which is at 3,154.11. It's up 0.28%. Now, Steve, what's the reason for this sea of green across the region?
I think it's, a continuation of that reflation narrative that really kicked in last Friday after a week of pause, really, to gather the bearings here. I think getting the President Trump fracas in the back window has really helped here in the sense that the Democrats don't focus on Trump's anymore, and they're just moving forward with stimulus. This is the first impulse. So it looks like we're going to have a stimulus impulse by March, and that's pretty good. But I also think the vaccine narrative, the drop in the COVID curve is all adding. But today, what we're seeing is a real lot of interest in Chinese entertainment stocks, and that's getting driven by box office gains on theaters. It seems that although the Lunar New Year is going to act as a drag on travel sectors, it's not acting as a drag on Chinese people going to the movies. This is a good thing, and I think this is going to drive retail sales, going to have a significant knock-on effect into other sectors of the economy, such as even possibly food, because people always like to eat when they go out, but not to that extent. I think it'll have more of an impact on catering. But this is still pretty good. This is a bit of a surprise coming into the markets. We saw LMAX China jump 88% today, and this is pretty decent signpost for that narrative.
Now, Steve, that's also the broader narrative of the Chinese consumer basically taking over that whole demand impetus, isn't it?
Yeah, I mean, this is pretty much the catch-up trade here that everybody's sort of been waiting on. We know that, manufacturing sectors through the world are doing very well, but retail has been a little bit lagging, not unexpectedly, because they're still dealing with second waves of the virus. We're still dealing second, third, and fourth waves of the virus globally. The virus continues to resurge. It's small pockets everywhere. I think we're going to have to get used to living with that. I think once the more susceptible people are vaccinated and the hospitalizations drop, I think there's going to be a call for more immediate reopening. And I think this is what markets are looking at right now. We're just going to have to live with, the lingering thought of a virus, even as vaccines slowly roll out.
Now, Steve, on one hand, you have that. The other hand, you have this extreme bullishness all of a sudden in oil markets.
Yeah.
Now, what's fueling this surge in oil markets?
Well, besides the reopening and vaccine narrative, which has continued to backbone oil markets, we've had a freeze in Texas. Not only have the Permian Basin oil wells frozen shut, not producing any oil, we're also getting problems on natural gas coming out of the Gulf of Mexico. That's a problem because it puts more pressure on heating fuel and gasoline, and this is for people to, as substitutes to electricity, and this is putting prices up immensely higher. Not only that, we've had a little bit of a reigniting of the never-ending smoldering embers coming out of the Middle East, which are also adding a little bit of momentum to the play. But remember, Middle East and Mother Nature are generally short-term drivers, but I think the general optimism here is all around this reflation trade, and oil arguably is probably the leader in the reflation trade, at least in the market's implied break-evens, because it's really driving the inflation narrative. It's almost a one-to-one beta with break-even. So this is a pretty good shift. We see more people buying oil futures that don't typically buy oil futures. They're buying them as an inflation hedge.
So then, and that carries on to bullishness in iron ore and other commodities, isn't it? there is a thesis that says that we're the start of a commodity super cycle. Is that something that you subscribe to, Steve?
Well, I mean, it all depends. Or like the definition of a super cycle, really, it's sort of a vague. We're in an upswing, that's for sure. That I agree with. Super cycle is something that I'm not quite sure, whether we're going to see $100 per barrel in oil, given that there's 5 million spare capacity sitting in the ground right now, not being used. Other commodities are suffering from logistical supply distributions. One, because of the vaccines, the mines can't produce enough. South Africa is still dealing with the vaccine rollout issues, although those are getting ironed out, and it suggests to me that major miners will start producing more commodities again, and gradually supply chain disruptions will ease, and this will allow more commodities to flow. So, I mean, there's a counter to both arguments here. Yeah, I think of the immediate impulse because of the shortages of commodities, prices will go higher. I think as they'll probably crescendo to a peak around midsummer where the reopening boost happens. And then from there, where do we go from there? Very much depends on how inflation actually starts to permeate through the markets and whether commodities will benefit from a much weaker dollar, if that is so the case, given the reflation narrative.
Now, Steve, we've got the Singapore budget coming out this afternoon. What are markets looking out for?
Yeah, just more coal in the snow, really, or more charcoal in the snow, really. That's the markets are considering, thinking that the Singapore government's going to continue covering not only the servicing sector, but also individuals. This will be good. But I also think there's going to be some room in that budget for new technology, which is also going to flourish. Remember, Singapore is now trying to compete, in those sandbox areas for technology, trying to attract more tech into the neighborhood as opposed to just relying on manufacturing and servicing and banking. This is sort of an endearing thought here. I mean, who doesn't want to live in Singapore, really, when you think about it? And this is really a welcoming embracement for technology firms. Mind you, it's a little bit expensive to locate, but the tax breaks that'll be on offer by the government and the stimulus and the venture capital that's getting offered up could be attractive offerings for tech sector people.
Now, finally, Steve, what are the events and data we should be looking out this week?
I absolutely think U.S. retail sales is the marquee event. It'll really be the proof in the pudding whether U.S. consumers have started to open up their pockets. If they haven't, I think the market goes back into a pause. If they have started to spend on goods like the rest of the world is doing, this should be very good for stock markets and possibly give them a lift off into the weekend.
Now, Steve, thank you very much for your insights.
Thanks for having me, Brian.
We've been speaking to Stephen Innes, Chief Global Market Strategist at Axie. On the ASEAN Midday Market Watch, I'm Brian Fernandez. Check out www.bistech.asia for business and technology conversations.